Hello everyone, welcome to the Ichimoku Charts.com daily analysis for the S&P 500 for Tuesday, August 20th, 2013. Well, a continuation to the downside trend today, and previously we had the market making a series of lower highs and lower lows. Today's candle, even though we have a white-bodied candle, has failed to change the trend to the upside. We have a candle that's made a lower high but a higher low, and therefore we don't have the opposite configuration of trend, and therefore no change of trend to the upside. Now, having said that, however, this candle represents a change in sentiment in the market. If we look at the previous four candles, we have a series of black-bodied candles with this very strong dynamic first time frame downtrend down through some very important areas of support. And today, for the first trading day in about a week, we're now seeing a white body. And the white body denotes the buyers making an amount of net bullish progress on the day between the open and the close. So in net terms of momentum, we have had something of a shift in sentiment from the sellers to the buyers. For the previous day's trading, the sellers were in control. They were strongly in control by closing the market down towards the low, and they were fairly strongly committed to taking this market lower. They did test up above the 1654 level of previous support that's now turned into resistance, and price action was rejected from above that level, as it has been today. And that's quite important to this market, that there is potential for a change of trend to the upside because of this shift in sentiment in terms of net momentum to the buyers. But the large shadow on the top of this candle does raise doubt about the change of trend to the upside occurring. The market once again for the second consecutive day was rejected from above the 1654 level, and that could be significant. The shadow on the top represents the buyers losing commitment as they tested up around that area. The market has also closed around the midpoint level, and that suggests that neither side has closed with control of the market. And if we look at the previous four consecutive trading days, the sellers have closed with control, and for 3 out of those 4 trading days with very, very strong control. And that's why we had the dynamic trend to the downside. But today, what we'd like to see is the buyers taking control, but they haven't done that. But the story here really is that the sellers have lost control, with neither side taking control. So that in itself does set the market up for a potential change of trend, but we do just need to be careful of that. We do require confirmation, so we will be watching the low of this current candle for a potential continuation of the trend to the downside. Now, I suggest that if the trend does continue down, then we should find some support down around the bottom of this highlighted yellow zone around the 1637 level, and we have this large zone that extends up to the 1675 level that has been tested on many occasions as support or resistance, and anywhere within this zone could hold as an area of support or resistance, as it has done in the past. So here we are seeing a potential for a change of trend, but 1654 is important. But if the trend doesn't change, certainly down around the 1637, 1638 level. And that also coincides with an area where the top of the cloud is trading as well, so we have potential for very strong support down around that area. Now, if the trend does change, we do have the at the top of the highlighted area, we do have the Ichimoku indicators trading around that zone as well, just around that region, and that will strengthen the amount of resistance up around there if we do see the buyers come back into the market strongly, so we do need to be aware of that. And above that, the highlighted yellow area here was a window that was opened up, and windows can act as areas of support or resistance, and there's an opportunity for it to act as resistance if the market does trade up to that level. So some very solid resistance overhead for this market, but some solid support just down below where the market's trading at the moment. In terms of the Fibonacci extension, we've had the market trading through the 100% level and down through the 168% level, trading in a bearish manner down below there, finding resistance at that level now, interestingly, for the past two trading days. So there is potential for the market to trade down to the 261.8% level if we don't see that first time frame change of trend to the upside. That level is down around the 1635 level, coinciding with the bottom of that highlighted zone of potential support, and also coinciding roughly with an area around the top of the cloud. So very, very solid support down around this area. And in terms of the Fibonacci retracement, we're in an expansive mode of that, trading through the 161.8% level, slight rejection from below the 261.8% level, then bearish trading down below there, and now our target here is the 423.6% level down at 1635, coinciding with the other Fibonacci technique, coinciding with the bottom of that yellow zone, and coinciding roughly with an area around the top of the cloud. So very, very solid support expected down around this area from roughly about 1637, 1638 down to about 1630 or so. In terms of patterns in the market, and if you recall previously I suggested that the market had completed a complex head and shoulders pattern, and here we had the left shoulder. We had two peaks on the left shoulder, a very a solid and definite head here, and then a right shoulder with two peaks in that as well. And then we had the breakout down below and the close below the neckline, giving us a target down around the 1652, 1653 level, and the market has met that target. So that has been potentially a good trade, but the problem was once we had confirmation of that with this very large solid bearish candle, it was really quite late for us to get into that type of trade, and getting in here there wouldn't really be much left in the market before we met the target. Now the fact that the market has met the target suggests that there is potential for a change of trend, but let's not preempt the market. Let's wait and see how the market reacts around this area where we are trading at the moment. In terms of Ichimoku, obviously a bullish market in the long-term time frame, with the market trading up above the cloud. The market is now trading fairly close to the cloud, and if you recall when we were trading up around these levels, around these highs, around the 1700 level and just beyond, we were looking very overextended, and I suggested that there was a possibility of the market coming back to meet the equilibrium suggested by the Ichimoku cloud, and the cloud represents equilibrium in that long-term time frame, and markets will move from equilibrium to disequilibrium and back to equilibrium, and that's exactly what we're seeing at the moment. So the market is so close to the cloud now that we could have one further test down below there, and then the market moving back away from equilibrium, and that could be to the upside. It could also be to the downside. So let's look for a potential breakout down below the cloud if we do see continued bearishness in this market, but I doubt that that's going to happen all of a sudden. I expect that the market will either bounce or we might see some congestion. And considering that we have had this strong sell-off, we have done a fair bit of work in a short space of time, and the market is likely to take something of a rest or retrace some of this first time frame downtrend. In terms of the medium-term and short-term time frames, we are trading down below the Kijun-sen, the pink line, and the Tenkan-sen, the green line here. And interestingly, prior to today's trading, both of those indicators were pointing down, reflecting downside momentum, and they have turned down quite quickly and quite sharply, reflecting the strong bearish candles that we've seen recently. But now they have turned flat, and that's important. And when the Kijun-sen turns flat, specifically the Kijun-sen, price action it tends to be attracted back towards there. So that does suggest that there is a good possibility of a change of trend back to the upside. So let's be watching this high for a potential higher high and higher low. But crucial to this market at the moment is the area around 1654 will, or it has potential to provide solid resistance once again. Just looking over here at the Chica span, that basically represents momentum in the longer term time frame. It's the closing price today projected back 26 periods, and it is below the corresponding price action, suggesting that we now have some downside momentum, so a change in sentiment in the market, and that's reflecting what we're seeing in the medium and short term time frames, but not so much what we're seeing in the longer term time frames. So there is a possibility of this market moving lower based on that occurring. The market will need to move substantially higher in the next week or two for that Chica span to change the sentiment in the overall market. So not likely that we will see that occur all in one go, and we will be getting potentially some mixed signals over the next week or so at least. But really, as I've already mentioned, we do need to watch the area around the high for a potential higher high and higher low, but also there is potential for the market to continue trending down, and we should find support down around this area, extending down to around the 1633, 32, roughly 30 level. and we do need to be patient and wait for the market to resolve itself in either direction.